Join. So yeah, thanks for joining. You guys are obviously here because we put our GammaEdge Framework course available at everyone last week. You took advantage of it, so good on you. For the next couple Fridays, keep the momentum going. We just wanted to make time. If you guys have any questions, more than happy to answer those. So you can either come off mute, raise your hand, drop them in the chat, whatever. I don't care, and we can go from there, and you guys will get a recording of this. I'll send a recording out when this is over. So, JLN, yeah, you're talking about short options, assumption, everything is long. That's correct. We do have a data source that we do incorporate known short trades that are validated. Those are incorporated. So, yeah, we do incorporate those, like the JPM hedge as an example on the SPX. So, yeah, I don't have a ton else to say there. Yeah, I mean, we're just looking at the majority of the structure, right? Like getting directionally correct. Obviously, you're not going to get every single trade in there, right? But the way that we view the market and whatnot, we don't necessarily need to be exactly perfect. So I'm sure what else you guys have. I don't know. Has anyone had a chance to work through any of the lessons at all? I guess any feedback on if you learned anything not clear? Fire away. Yeah, sure. So the transition zones, I mean, those are the point of structure where, let me just pull one up for you real quick. Share my screen. Yeah, sure. We can look at this. No, we'll just look at Apple. I already got it up on my screen. Yeah, so we got Apple right here, transition zone 222.50, 225. I mean, this is really just the area in the structure looking at net OI where we start to see the difference between call and put speculators start to dominate those strikes. So it's really just kind of a gauge of sentiment. What we see, obviously, this is like a nice tight transition zone, right? Which is what you want to see, kind of a clear, well-defined transition zone. Once you start to get above P-trans, this is where obviously, see calls start to dominate up the strike. And, from what we've seen, this is generally where tailwinds in the market start to come. It's just a combination of those deltas start to, you kind of get the first point is, the additional call speculators start to come in. That increases the exposure. Second, you start to get the charm effects from those out of the money calls shifting to in the money. And so, I mean, that's kind of what's happening on the top side of transition. Same thing on the bottom side of a transition. Again, we look at it as a kind of sentiment point in the structure. Below there, you see put speculators start to have a chance to take control of the structure as well. So really, that's just a really good kind of, how should I say it, line in the sand type of, it's not an indicator, but just a zone to be aware of. And, as you will see in the lessons, kind of in between this transition zone is what we just called the chop zone, just because through observation, we have seen that there's just a lot of chop because dealer influence in there is kind of minimalized. And then last point I make is, you guys probably haven't gotten to this section of the GammaEdge framework yet, but there's in the extracurricular section, there's something called the P-Trans plus GEX portfolio. This is 100% mechanical strategy where the theory is we're entering above P-Trans and we are playing for the stock to go to plus GEX. And so it kind of just plays on and validates what we just discussed above what happens above P-Trans. So, when you guys get to that point, you can take a look at that lesson and I guess just kind of better understand the kind of mechanics behind what we're talking about. Michael, you got anything to add there?
Nope. Sounds good.
Yeah, I mean, above P trends, that is generally, as we start to progress higher, right, that is kind of associated with a volatility dampening environment. But yeah, one thing I'm going to say too is like, at least I don't, there are some people, but I don't necessarily get hung up on like, this is what the dealer is exactly doing, right? Like it's more of just understanding the structure of the market and what environment are we in. So like right here, we're in a call dominated environment. Okay. Call speculators are in control. I don't really care like what the dealer is doing like at the 230 strike, like who cares? Like if we look at the market trend model, this is up and to the right. We're seeing improvement in the structure day over day. Obviously, like if you're not a member of GammaEdge, you can't see that. You can just take my word for it, or you can look at the newsletter or something that's for free. But yeah, I mean, I would just like if you're fixated on, you know, what exactly is the dealer doing and like what's their exposure and all that stuff, I would encourage you to also take a step back and just think about, okay, what is the structure? What is the environment? What is the sentiment of the market? So, I mean, kind of just going through the bachelor's module, right, that we teach. It's like, first off, what is the sentiment? Or call or put speculators in control of the environment. Yesterday and today, we've seen a big shift in the structure where call speculators are certainly in control. Second, what is the trend of the market? Trend is short-term higher. Look at the market trend model. You know, 2 days ago, we got a flip of the ribbon. This may sound like foreign language to you guys, but we discuss it on the GammaEdge framework. Understand the trend lessons where we talk about it. And then, you know, it's just been lower left, upper right. Very nice trend all the last 2 days. Obviously, you know, there's a news event and we can't predict what was going to happen on the news event. If someone says they could predict it, well, I would be skeptical, but we have the tools to understand kind of what happens after that news event. So yeah, we got the massive gap up, but then, okay, what's happening after that intraday? And we've been able to see that with our tools. I mean, doesn't necessarily mean retail squeeze. I don't exactly know what you mean by that. Just means that call speculators are more control of the environment. It's a more bullish environment. Bullish people are more, they're showing their force more than, yeah, I wouldn't say that anyone's getting squeezed. It's just people are bullish and they're buying one way or another. I mean, that
So
dealer
here,
hedging is a direct kind of correlation to the buying taking place in the market. Again, I wouldn't get so fixated on like what like gamma squeezes and retail squeezes and dealers and all that stuff. Again, like just take the step back and just understand contextually, like what is the environment that we're in.
yeah, simplistic. If there's a significant amount of participants in the marketing opening calls, that's positive delta, right? I mean, let's just break it down to black and white. So if I open a call or you open a call, you're putting positive delta out there, right? Just very simple. So what's the effect of that? The mechanical opening. Delta is king and swamps any other second, third order Greek. So, and that's why we look at, you know, the delta. We do look at gamma and charm, but that really only comes into play when you actually have spot price moving. Delta is what basically drives the bus. If there's a significant amount of market participants opening out of the money calls, which will drive price higher just because of speculation and positive deltas coming in. So that's just very simplistic, but that's really the only thing you need to worry about over the expiries, which is why we have the purple tiles. So what is happening over the course of expiries? So
Yeah, the other thing too to hit on is like, you know, the options market is not a hammer and everything is a nail. Like yesterday, there's other agents in the market, right? And so us just looking at the market through the lens of the option structure, that is just one way of viewing things. And so we know that there is a lot of participant in the options market today and over the years, and there's more and more focus on it. So that's why we focus on it, because we can get a good handle on what are participants doing today and how are they positioned into the future. so that we can better understand kind of what the expectations of those speculators are. So hopefully, yeah, if that's not clear, GK, or got any other follow-ups, obviously, now's your time to do it. Stop sharing. Yeah, I don't know if for those of you who've gone through it at all, is it helping at all, hurting at all? This isn't really like meant to be like the one way to trade, right? It's more of a complement to an existing system, just kind of giving you just another way of looking kind of under the hood at the market, hopefully offering some confluence with what you're already seeing. Or, I mean, if you're relatively new, then hopefully this is helping you in your kind of learning journey, right? Unlocking some stuff. Yeah, awesome, JLN. If there's anything we can clear up for you, let me know. I assume you made it through bachelor's, master's, and doctorate. That's a lot to do, but we tried to make them, fairly easy to get through, not too long. Or at least written in plain English, right? So it's not too confusing. Yeah, that's cool. Yeah, I mean, obviously we have a lot of SPX USDT traders, a lot of people doing calendars as well. So no, that's cool to hear. Yeah, yeah, so the volume stuff, in the doctorate module, that's probably of interest to you. I found that to be super helpful intraday. For those of you that don't know what we're talking about, I'll just go to it real quick. So the vol in, I gotta say, today was a pretty odd day that I haven't seen like perpendicular lines like this before generally. But anyways, what we're seeing is this is the centroid. We're looking at call volume throughout the session and kind of the centroid of a distribution. So kind of the midpoint of what speculators are doing. And so what we want to understand over the day is kind of what is the trends of those centroids. There can be 4 states. There can be, I'll just go to the lesson real quick. Intraday here, here. States. Yeah, so right, there's 4 states. There can be, trending day higher, which is call speculation up and out, and then puts are also moving up and out, which we kind of infer is just closing of puts, opening of calls. And then you can see obviously good confluence with the market trend model. Those days are super powerful for 0DT traders, especially, but even for swing traders, we believe, as we say in the materials, everything starts at a day trade. So, if you're wanting to get long or something, obviously it'd be great if the market overall was constructive as well. So this is kind of a way that I like to use it because I prefer to kind of swing trade things more than trade intraday. But yeah, you have that condition, and then we have kind of a lower trending day, right? So, and then there's obviously the other 2 days where you kind of have a flat top here. That's a better kind of trending lower day, and then you have kind of a flat call centroid and kind of upward moving put centroid. So that kind of just infers really like bullish optimism today just isn't there because call speculation just isn't moving up and out. And there's also like not a sense of urgency to the downside via the bulls because the mean of their move is moving higher. It's not moving lower. So, and we believe, out of the money speculation is what drives markets. So that's really why we're focused on what these centroids are doing because, intraday, the volume of the most of the activity taking place is out of the money. Yeah, Ray, MTM has been the most effective keeping on the right side of the market. Was wondering if the centroid indicator is more dynamic and predictive. Yeah, I mean, we just talked about that, right? So I love using those two in combo. Here, we'll just go over it again real quick. What screen measuring? That's the right screen. Yeah, so exactly here, market trend model is moving lower. Again, yeah, you kind of saw the intraday reversal here. We also saw the intraday. Well, it wasn't really an intraday reversal per se, because we just saw, call speculation moving lower throughout this session. Like, I understand this is from September 4th, and this is hindsight at this time, but that's literally all that we have. But you can go back and look at this if you're in the Discord of what these were showing, and we can just see what the lines of best fit were doing throughout the day. Was not suggesting any call speculation higher, really, for the most part. So, yeah, to your point, Ray, they are real powerful when you get that confluence intraday between the two of them. Like even yesterday, our post on Twitter that we had was showing. Let me pull it up real quick. So, yeah, so like yesterday, here, let me just show this to you real quick. Sorry for all the screen sharing back and forth. Like here, you can say that this was yesterday, intraday, we're getting that intraday ramp. And then we saw the ramping higher with the vol-in command as well, really, especially on the put side, was just being, just trending straight up throughout the day. And so, yeah, that comes back to my point, like predicting that massive gap up Wednesday night, impossible to do. But what we could do is intraday, we could still understand what the trend of the market was doing. So we could take advantage of it like that and position yesterday for today. So that's, a powerful way to use that. Yeah, JLN. Yeah, I mean, we have a lot of people that like to do the butterflies intraday, especially, it's really effective starting around kind of after the London close between 11 and 1. That's really where those lines of best fit, and kind of the deterministic nature of where we may close starts to become more and more powerful. It's been rare where kind of, the market doesn't kind of trend in that direction for the remainder of the session. Like, obviously things happen, right? And the market could reverse, but that's again why we have tools to know where we're right and wrong. But yeah, the butterfly, yeah, exactly. Like, it doesn't have to be like the market doesn't have to be going straight, right? Like, even if it's trending higher or lower, we can still get an idea of where it may trend to throughout the session. So yeah, we got a lot of people using that stuff. But yeah, even I know we do a lot of DRDT stuff, but swing traders out there, not sure if you guys, yeah. So
I posted something in the Discord today.
oh yeah, I'm just gonna show them this spreadsheet real quick.
Yeah, how about it?
Blow their mind. So yeah, GK. I mean, I primarily swing trade, and so what do you guys look? Can you see the spreadsheet right now?
Yep.
Yeah, so the spreadsheet is going to look like a lot, but it's really just a culmination of all of the indicators and stuff that we talk about in the GammaEdge framework. So again, like, I mean, the playbooks in the master's module were, first off, we want to understand and get a directional bias of the market. So, I mean, that's kind of outlined every day in kind of our SPX game plan. We're looking at, like, this is the one I did today. You can just see right off, there's just a lot of green, which means call dominated environment. Again, market trend model was trending higher. So I was bullish coming into the day. It doesn't necessarily mean I'm going to do anything. And I really didn't, because just of the size of gaps up we're getting on stocks. I'm just not super comfortable myself entering here, because I feel like the risk of a constructive pullback is non-zero probability, and the kind of how much room to the upside we have. I feel it's kind of, skewed to the downside. So I'm just going to sit and wait for a little bit. But nonetheless, like, okay. And then we opened up above the transition zone today. We could see 6,000 on the full SPXP complex. Is where we're seeing a ton. That's the most convex strike. And we're kind of right around there right now. So that's how I first use it. And then what I do is, so I've just built this spreadsheet where I just have all of our scans already kind of built into this spreadsheet. But from the lessons, like the call dominated scans where above and below spot price are both call dominated, that's a super powerful one. So again, first off, I'm just looking at this chart to just understand the number of stocks that are call dominated versus put dominated day over day. So we could see, yesterday and today we've gotten a large expansion of call dominated stocks relative to put dominated stocks. So again, just back to the sentiment, we're just kind of rounding out our picture of what sentiment is. Everything that we're looking at is pointing to, yes, it is kind of a risk on environment, bullish sentiment, right? So then going back to the scanner, I'm just filtering for all call dominated stocks, and in the Discord, all you got to do is just go to the scanner channel, and then, here's like the new call dominated list, but you just type in call dom del and it's going to pull up stocks for you. So yeah, again, so look, I mean, there's a gazillion stocks down here. And really I'm just looking to see which ones look promising, like, especially I want to look at the ones above P-trans. I want to look at the ones that have good risk to reward. So risk to reward means kind of the distance from P-trans to plus GEX. So, like Tesla 4% that offered good risk to reward. And then, I use kind of a charting flare too. Like I like to look at just kind of a bullish setup per se, where, we're taking out the high of the prior day. And then again, using all these tools. I really like our tools. I know I'm bouncing around, but I just want to keep harping on it. For swing traders, I think our tools do a really good job of contextualizing the market in terms of, are we just in a bullish or in bearish environment? Because if you can get the trend right, that's a lot of the battle. Then again, go limit the pool of where you're shopping in to those call dominated stocks, and you're gonna have a lot better. I mean, I can't promise you're gonna have a lot better success rate, but like you're doing yourself justice by like doing this, because these are the most favorable candidates, right? Where we're seeing speculation on the call side go into the name. So I mean, that's kind of all you can do, and then place your bet. Hopefully it goes your way, right? So that's what I would say to you. I mean, I would really just boil down the stocks to what is call dominated, what is, newly call dominated. I mean, especially that, like I'm looking to see what stocks are newly call dominated, because that's theoretically the ones that have the most room to run to the upside, because they're just now getting call dominated. And then, looking at the GEX ratio. So like AAL, a GEX ratio of 99, that means it's like the highest it's been in its look back window of like 150 days. So it's going to take, that means it's never been more bullish, which again, never being more bullish is a bullish, but at the same time, like I would rather it be, 50, 75% GEX rank with room to run higher. So, yeah, I don't know. Is that helpful? Michael, if you got anything to add, go for it too.
No, GK, we have core playbook trades that obviously you've seen in the GammaEdge Framework, crossing P-trans, crossing zero GEX. Those are two core playbook trades. The market trend model, we have tag combos that are completely back tested. So when those tag combos trigger, we know the probabilities that those will continue and your probable outcomes. So we make it very mechanical, or at least I do, using the MTM. When those tag combos come, I take the trades. I know what my probability is that it'll be a positive outcome, and manage the risk, and that's really all I can do. But yeah, what Taylor's talking about, call dominant stocks and crossing that P-trans level is extremely powerful. Transitioning into that call dominant environment where OTM call speculation is ramping up is, if we go with our thesis, the tail wags the dog, those call speculators are going to drive price higher. So
Yep. Perfect. GLN, background about us. So Paul's not here either. He's one of the co-founders too. Yeah, so GammaEdge started out of COVID, right? Like as a lot of stuff started. We just met in different Discord rooms. And Paul was doing stuff with the market trend model, and I just kind of stumbled on the options market and the gamma stuff. And I was just talking with Paul and saying, hey, if we combine the two of those, there may be something powerful. So all of 20, all of 21, you know, we were just downloading option chains manually every morning. Just kind of building out our models and whatnot, seeing how price was reacting. Yeah, just kind of building out our visualizations, our tools and whatnot. And it's almost 2025 now. So almost be 4 full years doing this, GammaEdge wise, that is. But yeah, Paul, I mean, Paul's super sophisticated options guy. He's been doing it forever. My background on Michael's background is kind of more like, if you're like familiar with like IBD, swing or, you know, canceling trading, that kind of stuff, like, yes, it's technical analysis, but, you know, it's just understanding the context. You know, is there more buying or selling happening in the market? And this is just, again, a great overlay to help us with that. So again, looking at, you know, stocks in an uptrend, or they want moving averages higher. Sure, that's cool. It really doesn't matter what you use to make money, right? Just as long as you make money. So you moving averages higher, market trend model higher, call dominated stocks, like that's really good confluence there. So yeah, I appreciate the words, Jalen. Yeah, we'll have a recording of it later for sure, David. And I don't know, you guys are following on like YouTube, but you know, most mornings we'll post like our pre-market video we do for the community after the open. So, you know, if you guys aren't a member of GammaEdge, you can go back and you can review that. If you go to GammaEdge.us, you can get our newsletter. It's free too. It's just kind of a highlight of the day. Just kind of visual outputs, not a lot of commentary because we save that for the community, obviously. But I mean, it's still a lot of value, to be honest with you. So roughly how many active participants are you up to in the community? So we have hundreds. Got hundreds ranging from retail traders, sophisticated retail traders, private money traders, you know, RA people, former market makers, fund managers, all that good stuff. Yeah, so I'm not sure if you guys have any other questions, like Kurt, Rex, Lucas. I know y'all are on. Paul, if you guys haven't had a chance to ask a question, if you guys have a question, maybe your question's already been answered. But just want to make sure you guys know you guys can ask away if you'd like. Can you discuss how you differentiate yourself from other Gamma sites? Yeah, sure. So, sorry, I just got a notification here real quick. Oh, that's on the app itself. Yeah, so I mean, in terms of the other Gamma sites, I honestly haven't been on them in a while, so I don't really know what they specifically talk about. I just know like our framework, we have back testing to support a lot of the stuff that we do, so it's not just like theoretical stuff. And just that, it's not just theoretical stuff. Like we are practitioners using this stuff every day with our own money. And so I guess just in terms of the tools that we use, like I don't really think anyone talks about kind of the out of the money speculation the way that we look at it. However they look at it. So yeah, I mean that's pretty much what I'll tell you. I mean, between our dashboard, you know, just kind of the scans that we have, methodology, all that good stuff. That's what I'll tell you. Like the other services, they may have valid tools too. And like if those tools work for you, then that's great. Like again, we're just here to educate and like help you make more money at the end of the day, right? So subscription options were a bit confusing, but I don't know. David, does that answer your question? Like, and some people just focus on zero DTE, like we focused on zero DTE, we focus on the full complex. We do a lot of equity stuff as well.
Yeah, I don't. Nobody that I know of industry wise is producing some of the content that we're producing intraday and how we're interpreting it, and then providing the education for people. Sorry about that.
I mean, that's the thing too.
Yeah,
Like, who just gives away their entire methodology for free, right?
right.
Like that's our entire playbook is in the GammaEdge framework.
Yeah.
So
Yeah, I mean, where we excel is education, customer service. We're not just people throwing out stuff, and we're trading the money. And I don't know of anybody else that's actually running a mechanical portfolio with real money, with the results that we're using. And it's all there. Like we're not hiding anything. Like every trade is shown. Like there's no like Wizard of Oz, guy behind the curtain. I mean, all the trades are there and you can take them yourself and you can trade one share. And I mean, it's a 75% win rate. We back tested it 13 years. Like I don't know anybody else that's using the the uh the data the way that we're using it to actually trade and have a profitable trading plan. So
yeah, I mean, Joel, that's the intent of it is like it does no good to keep this behind the paywall because like you need to know this information if you're going to be successful with GammaEdge. So like you might as well give it away from free. And like if you like what we do, then you'll return the favor and come join us because you're going to need our tools anyways to implement what you learn, right? So like if you get it for free, I don't care. Um, we're hoping that it helps you as a trader, and then selfishly B, like we got the AWS overlord to pay. So hopefully you come join us. Um, and if there's no value in it, then no harm. Like we understand this isn't for everybody. But yeah, just any feedback on, where we missed the mark would be appreciated. 806, no, we don't apply anything on a white label basis. Yeah, I mean, I've seen like another person kind of replicate what we've made. Obviously, nothing you can do about it. Again, kind of coming back to David, your question, like this stuff that we do isn't like novel or groundbreaking per se. Like you can kind of learn like on the internet how to do a lot of this stuff, like build models and stuff like that. But it's like our interpretation of it, again, the back testing behind it, the rigor behind it, and then kind of obviously like the derivative visuals, like our vol stuff, our volume commands, like that's new as well. And we have some and really, the call and put dominated structure above and below spot price, like no one else is doing that. We have all the data to support that kind of stuff. So, and that stuff is like critical to what we do. So, I don't know, Dave, is that any more clear? Yes, thanks. All right, cool. Yeah. And yeah, to Michael's point, we're in the Discord all day, every day. You can see the bags on our Michael and my face because, we had an open mic from 8 to 9:30 last night where, people just come asking questions and then back at it again this morning. So, I mean, it's a lot of work, but we love doing it. So, no, Rex, you have the course forever. Like the Notion document that you have is yours forever. So feel free to review it whenever you want to. I can't take it. I guess I could go delete all the content if I wanted to, but um, I don't want to do that because that was a lot of my life I spent writing that. So. It's not a gamma wall. It's just that, yes, prices move to where more of a call dominated environment. There's no gamma wall there. Yeah, let me just make this point kind of clear for.
I'll answer David's question. David, we don't have tools or we don't have futures live data um, at the moment, just because mainly because the cost is just enormous to do futures. I think it's
No, however, though, what I will say is we have a
yeah,
lot of futures traders in
we
our
do.
room. Like
Yep.
if you're an ES trader, SPX is the most liquid market in the world. So like
Right.
using the SPX data and then executing through ES, like people do that all the time. Same thing with the Qs, same thing with
Yep.
IWM. Like obviously if you're trading, treasury futures or oil futures, copper futures, like we can't help you there. But if you're trading an index, then you can certainly use the data from the indices that we do have and then execute through the futures. Or we have a
Yeah.
lot of people that take our levels, do the quick conversion and put it on their futures chart too.
Yep. I agree with Taylor.
So David, David, let me know if that answers your questions. So yeah, like GK, the way we think about gamma walls is like plus Gex, like up here at 6,000. Like that is just the most convex strike. So it's not that it's a gamma wall, but what it means is that this is where the most short-term positioning is positioned right there. So once we move up through 6,000, the risk there is that there's a monetization event because when they put those their trades on, there's a lot of out of the money risk that they've now captured when we go to that strike. So when it goes in the money, they're going to take their money unless we see that strike start to roll up. Then that tells us that they are kind of reaffirmed and they are committing their capital higher into the structure. But yes, theoretically, like until we get over this strike is decaying. So the dealers are, I guess, technically, getting less long in their book so they can relieve that hedge. Um, but again, that's kind of separating the theory from like practical implementation of what is actually happening in the market. So this is more of just like this is like a target that we use. Like if you're in a trade and we get up to 6,000, I'd be cognizant of maybe locking in some profits because we've seen it all the time where there could be a little bit of a monetization event.
The other thing is when you come into zero DTE, what you're seeing in the morning, all of that stuff is hedged. Like that, all that stuff is done. The only thing that needs hedged is what is coming in on a zero DTE basis. Okay, just so you and if spot price moves some, yes, but I'm just saying in a general basis, when you come into a day, the all that stuff is hedged previously coming into that day, unless you have some significant news or some significant move in spot price. Now the zero DT stuff coming in, yes, that needs to be hedged back and forth. But what you see coming into the day is already taken care of. Everybody thinks that, oh my gosh, all this hedging is occurring. That's not necessarily the truth, and that I think so many people get caught up on that.
That's why we have the volume commands too, because we want to see what's
Exactly.
actually happening intraday too. Like there's a
Right.
structure pre-market. That is the structure, like a bullish or bearish structure, key levels, a lot of positioning. But then once that happens, the market's going to trade. And so we want to understand like what's transacting on the day. And we just do that through looking at the volume.
Right.
David, I mean, we can go through it right now if you want to about what you want to see. I mean, we have it like this is the Discord right here, so that's what you should see in the Discord. Are you not seeing something? And then Ray, yeah, still stimulating masters and doctor modules at SPX and what moves it and why I'm here as a futures trader. Yeah, I mean that should have been somewhat clear in the bachelor's module, especially the speculation of between call and put speculators in the market. That's what we believe is drives the market. So hopefully that's somewhat clear. Yeah, the doctrine module should help too. But David, yeah, like this is the web app here. And then this is the Discord here. Hopefully, you know, you're seeing all that stuff. Are you not, is there something that you're not seeing? All right, we'll give David a second, I suppose. So yeah, guys, let me know if there's any other questions. If not, I appreciate the time. You know, we'll get this recording up there eventually. We'll have another one of these in a week or two. And yeah, again, if there's, you guys will keep getting more emails, you know, just about the course and whatnot as you progress through it. But yeah, if there are any questions, obviously just you can reply to those emails or you know, schedule a Zoom or stuff too. Black Friday, no, we just offer annual memberships where if you pay for 10 months, you get 2 months free. So pretty good deal. Take advantage of that anytime you want to. But sure, yeah, we can call it a Black Friday. It's almost Black Friday. So Joel, knew the Gamma game, full-time futures traders for several years. Nice. Order flow nerd, nice. Scalping is my game, nice. I appreciate the foundational knowledge in the course. Nice, yeah. Awesome. Appreciate it. Yeah, let us know how we can help. Thanks, guys. All right. Well, I don't think there's any more questions. So with that, thanks everyone for attending. Again, y'all can reach out anytime. We're pretty, make it known how you can reach us. And y'all have a good Friday and a good weekend. So, all right. Thanks, Michael. See y'all.
Yep. See you guys.